With Apollo Tyres. Now let's shift focus to TCI Express. In the spotlight today, JP Morgan has initiated coverage with a neutral rating, even as the company posted a softer Q1 performance. What is the outlook, and does the logistics sector, and especially TCI Express, get a boom from the GST cuts? Before we get to the management for their take, Mahima is joining in to set up that conversation.
Right, Tamana. So, as you rightly mentioned, JP Morgan has in fact initiated a note and is talking about the India's logistics space. They're saying that India's B2C e-commerce logistics market is outpacing the industry at a 16% CAGR that will continue till FY30. The labor shortages that was a concern is being offset by technological development. Automation is taking place there. For TCI Express, they're forecasting an EPS growth of around 14% from FY25 to 28. In fact, the management has also given a strong guidance when it comes to the FY26 volume. The growth rate is targeted at high single digits, anywhere between 8 to 9%. FY27, they see double-digit volume growth, 13% revenue growth, and EBITDA margins to normalize in FY27 is what the management has guided for. So yes, the things that I would want to know is as to how the landscape of logistics is taking place. Is H2 going to be better than the first half of FY26, and overall, how does GST rate cut impact the logistics space?
Okay, thank you so much, Mahima. Mukti Lal, ED and CFO of TCI Express, joining in. Mr. Lal, thank you so much for speaking with us. Now, just to put this into context, despite, I think, a softer quarter than expected in quarter one, there seems to be a lot of enthusiasm in the analyst community about how the subsequent quarters are going to look, based maybe on the GST boom as well, or the GST tax cuts moving along the whole logistics space. Just want to get your overview on how quarter two has looked like thus far.
Yeah, good morning. And you rightly said it is basically after GST cut, everybody want to be enhance the volumes, which is like in a slightly sluggish mode in last 2-year time. So everybody very enthusiastic about to be manufacturing will be increased by this boost up, and as specifically SMEs also getting very good thrust on that due to this double bonanza. Obviously, government has given tax cut on enhance the limits for the income tax, and then is a GST cut in this festival time. So certainly this even H2 would be fantastically well, and even Q2 number would be good one. HQ1 was slightly low because there was some extreme weather condition was also there, and always there is seems to be slightly weaker quarter all the time in this industry. It's slightly cyclical. So first half is slightly weaker, and then second half is much better. So hopefully overall scenario has improved a lot, and we're seeing traction in all the segments, specifically auto. As you seen, this tax has been cut from 28 to 18%. So that will be giving a good confidence to everyone to be improve that. Yeah.
Okay, when you talk about volume growth, can you give us a number to it? What is the extension of volume growth that you see? Because now this is a space where there is a lot of competition as well, Mr. Lal. You have the likes of Delivery and other players also coming into the space. What will give you the edge and the volume growth?
Yes, so as we depend on the one business segments, which is surface for us, now we also want to de-risk, and that's why we launch so many multimodal services, whether it's rail and then air international, then C2C. These segments is also growing very fast, and we're building up the capacity. So last year we slightly less volumes, and that's why we utilize that time to be improve our other product portfolio also, and this giving a good revenue in this quarter, and above also that one. So second also our key segment is the road surface, where we also focusing on vertical wise, and new vertical where we giving a special focus is solar segment, then defense segment, and then new bathware, kitchenware. These are the new entrant where we giving this premiumization of this product is happening, where earlier there was normal market. Now it is a premiumization is happening in this segment. So this is also giving a good boost up to our surface cargo also. Mm-hmm. And also new things you seen, quick commerce is come into picture. So that's why this movement of to fulfill these dark storage also happening. where
Okay.
people going beyond the FMCG and they going moving other items also. Yeah.
But that would effectively take away volumes from FMCG to dark stores, right? Per se. So it's a zero-sum game or not?
So this is a good thing where like FMC other products is also like moving on that, like footwears and then lifestyle products, that is also adding to these quick commerce. So that will be, because we are in a B2B, so we fulfill these dark store from warehouse to the dark store. So that business is also increasing in that way.
So okay, let's then try and pencil in this, Mr. Lal. Your first quarter was, in your own terms, in the con call, a steady beginning, but a YOY decline of about 2%, if I'm not wrong, on the revenue, headline revenue, right? Second quarter, has it been soft? Because expectedly it might have been soft because of the GST changes, etc., and monsoons, etc. So would it be fair to say that it's a soft or a steady first half, as you want to put it, but a pickup anticipated in H2? And if that is the premise that you're working with, what could the overall numbers look like for the year, sir?
Yeah, you rightly said. So this quarter two will be, certainly we will be lost the first growth after long time, as we since last 7-8 quarter was in a week. So first time we certainly will be given a positive quarter, and then second half, yes, must be on a good note. So overall year we are targeting to be volume in a like single digit growth, high single digit growth, and we also like targeting to increase the prices with the customer, and we getting good response from our customer, and that would be happen for sure.
So, Mr. Lal, one is the traditional logistic companies opening up newer avenues of growth, and the other is the new age technology companies. Some of them, their growth projections are much higher than high teens as well, at times reaching 25% too. Why is it that there's this gap? Is it because of the base effect? Is it newer forms of transportation that they are adopting versus traditional companies? What could be the reason? And can TCI Express get on to mid-teens kind of growth rates sometime in the near future?
So our motto to be have the qualitative growth first. So we always doing the business with the like profitability. We are not gung-ho about taking the growth on a slightly lower margin level. So we always have this in our DNA. Second thing, these other new age companies completely depending on the B2C more. So these time, as this is a festival time, so all the time they have these quarters are much better than other period of time. And our case is not like, increasing that way, but though again is a like cyclical, slightly less in H1 and higher in S2. So this way, our longer term view is that we will be having like, volume growth would be near to double digit, and then higher slightly price hike on an annual basis, which we taken in a last 3-4 year time, though we were not able to take in a last year due to some like lower volumes. So future is bright on that way, and we newer segment we are also increasing, and multimodal services also like putting efforts on that. So it is industry is not like dividing in a newer age or a lower age, because like old version, but there is some things newer companies more focusing in a B2C, and B2C as now quick commerce is also increasing very fast. So people is also like taking advantage of that, and we are like majorly focusing on B2B. So these are the reasons where we like getting like 8 to 10% kind of volume growths.
Okay, thank you so much, sir, for speaking with us. That was Mukti Lal, Executive Director and CFO of TCI Express, talking about what is going to be the logistics boom that they get from the GST price cuts. And of course, that's going to be a tide that lifts all boats, including for the logistics sector.